Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 30th of May 2025. First chart is the US Dollar Index Futures. I'm using this one with the colours in it as it shows you where the market has been trading in that green zone for quite some time now. The red zone above is the next resistance zone. You can see the market made an attempt to push up into it, but failed pretty quickly. Prices come back since, and it's trading in the shadow of this green zone, the longer term trading range, and it's looking vulnerable at the moment. After dropping just below the lows of the range, price gathered itself up. It made an attempt to move back into the range. Supply appeared to be drawn out almost immediately, and there was a lack of demand as well. Price came back to the lows of the range here, the lows of the current range. And this week, the market's attempted to recover. The close well off the week's high suggests that supply was drawn out again, and the market's just holding on at this previous lows. It certainly remains vulnerable, and after attempting to push higher this week and then closing poorly, it does appear that supply continues to be drawn out. Demand is relatively low, and the market remains vulnerable, perhaps for a breakdown at some point in the future. And this weakness has helped many of the associated markets, which you'll see as we move along. Next chart is the E-mini S&P. This is S&P 500 index futures. You can clearly see where the buying support emerged back here. And after a week's consolidation, price pushed up to the highs of the range and back out again. There's another week's consolidation here. Prices pushed up again. The last 2 weeks have seen the market trading within this bar's range for the most part, consolidating and absorbing supply. There's likely to be supply drawn out from this congestion to the left, and that's what the market's attempting to absorb. This is the highs of the range through here. All these up bars here are on quite low volume, so we don't really like marking them as the highs of the range. They're all on low volume, although this is where we'd mark the zone of the highs of the range. True highs coming through here with a little bit of associated congestion above that. So the market's trading sideways here at the moment, absorbing supply from the left as it pushes up towards the highs of the range. US Treasury 10-year note futures are continuing to trade within the range of this widespread down bar. Overall, there was a little bit of recovery here. We marked the highs of that range there. You can see the market moved up to that level, drew out some supply, pulled back in response. 2 weeks of consolidation, and we saw a push higher this week. That does confirm the buying support seen in the bottom of this bar, and that's been confirmed as buying support. This week the market tested for supply below the previous bar's close and then pushed higher in response. So that does suggest that there was buying support in the previous bar, and we've pushed higher in response, albeit fairly weakly. The market may move up to this level, but this market's more looking like it's trading a bit sideways at the moment within this range without any great intent, at least at this point in time. Copper price futures. Copper price futures, after a bit of weakness emerged up here, pulled back with an exaggerated spread, probably a lack of buyers in the market, and the market then had to pull back more deeply, which was to find enough buyers in the market to absorb the sellers at the time. Buying support emerged the following week, almost immediately, and we saw a bit of recovery. And pretty much since then, the market has been trading in consolidation mode here, pretty much within the range of this bar. It's been trading sideways, absorbing supply. This week, price pulled back within the range of the previous bar with a narrower spread on below average volume. So selling pressure was not an issue this week. This is a consolidation bar within the range of the previous up bar. So that's actually okay. If the trading conditions do improve, I would expect this market to push higher. If not, I expect it will trade within this range here. If any real weakness moved in, you've got this level down here where buying support has emerged previously. Gold price futures. Gold price futures saw weakness emerge up here and the market moved lower in response, but buying support immediately came in. The close off that week's highs suggested that selling pressure was still present and the market pulled back again in response. It did close a little off its low for the week and the next bar was up, which once again suggested there was some buying support in the market. And this week, price has come back within the range of the previous bar on reduced volume, about average overall. The spread was narrower. This was a consolidation bar. This is the market absorbing supply within the range of the previous bar, which was confirming buying support seen in its previous bar. And this is the market looking like it's actually in position to make an attempt to push higher if trading conditions are favourable next week. If trading conditions aren't favourable for any reason, I would expect a secondary test for supply, probably with a narrower spread and reduced volume. Otherwise, I would expect an attempt to push higher in response. Silver price futures. Silver price futures continue to trade sideways in a fairly narrow range. The market traded sideways within the range of the previous bar this week, similar to gold and copper. This market saw reduced volume and well below average volume, so selling pressure is not an issue. It's trading just above the highs of the range, which come through there, like that. The market pulled back, along with commodities generally. At this point in time, buying support came in on this bar, pretty good volume, so it was strong buying support. Price pushed back above the highs of the range, and since then it's been travelling roughly sideways. And this week, the narrower spread, reduced volume suggests that selling pressure is quite low, and that leaves the door open for an attempt to push higher in response if trading conditions are favourable next week. Like crude price futures, we saw some buying support emerge more recently. Once price broke down here, after it had been weak for some time, we saw buying support emerge here on this high volume. We saw a 2-bar reversal here. And since then, the market's been trading in consolidation mode just below this important level here. It's not looking particularly strong, but it is looking like there is buying support in the market, and it doesn't look as weak as it did when it broke down over here. So there's an attempt to support the market. It's not looking like it's going to challenge this $65 level here at the moment. I expect it may travel sideways within this range. And you've got quite a bit of buying support below that down in here. So if the market did attempt to push lower, I would expect further buying support to emerge reasonably quickly. But I think it's going to travel sideways between the 60 and the 65, at least in the near term. Into the currencies now. This is the Euro-US dollar currency pair, and you can see this market's been a little stronger more recently over the last few months as it moved higher. And back this month, the market came back in consolidation mode, moved back up towards the highs of the range here 2 weeks ago. And really the market traded in consolidation mode this week. It's a test for supply, but it's an awkward test for supply with a wider range than you might like. There was a brief attempt to push higher at some point this week. Volume was low and well below the average, so selling pressure is not an issue. But I think this market fundamentally is a little weaker than some of the other markets in the currencies at the moment. It does look well placed to issue a challenge to the highs of the range here. If it does, it may be subdued because this market is a little weaker than some of the others, as you'll see. British pound currency futures, they're a little stronger than the euro at the moment. Put these lines in. You can see, well, the euro is sitting in here at the moment, just below the highs of this range. This market pushed above it and attempted to break out last week. There was an attempt to continue higher, which failed, and price came back and traded within the range of the previous bar on reduced volume and below average volume. So selling pressure is not an issue in this market either. And this market could continue higher if there was further weakness in the US dollar next week. Japanese yen currency futures have been trading near the highs of the range up here. This is like a zone where the highs of the range are. It moved up to that a few weeks ago. Some weakness emerged here and price pulled back. There was some consolidation in here and price then pushed higher in response. And this week, it's another awkward looking test for supply with a wider spread than may be considered ideal. This bar here really does continue back down like that. You can see the market tested the lows of the previous bar this week before recovering somewhat to close about mid-bar or just slightly above it. Volume was reduced and below the average, so there's no serious supply in this market, at least not at this point in time. And this market is well placed to make an attempt to move higher, similar to the other currencies. It will depend to some degree on how the US dollar trades. They'll trade sideways if the US dollar holds on at the lows of that mini range. And if the US dollar does flirt with those lows, these markets will probably move higher in response, as will the Aussie dollar, which is also trading in a similar fashion to those other currencies. Here's the highs we're looking at the moment. Market made an attempt to push higher in response, and it came back and traded with reduced and below average, similar to most of the other currencies. Price closed within the range of the previous bar, so no serious damage done. And this market is also well placed to make an attempt to push higher if trading conditions are favourable next week. Bitcoin futures. Bitcoin futures came back to test the highs of the range this week. Not surprising, it's an important level. It's kind of what we were expecting. Put in some lines so you can see where we are. Here was the breakout initially. 1 week's consolidation here before price pushed up and established new highs. Some supply was drawn out up here and it continued for some time, and eventually that supply broke the lows of the range and price came back. There was a period of consolidation in response through here before the markets made a secondary breakout attempt. 1 week's consolidation again before the market pushed up to the highs of the range through here. 1 week's consolidation. An attempt to break out, which did see some supply drawn out. That's the close off that week's high. And in response, prices come back. And it's effectively testing the strength of the breakout from above. Volume was pretty high, still above the average slightly. So you may see some further work absorbing supply just above or just below the highs of the range here. You may see on a daily basis something like this for a day or two as the market continues to absorb supply prior to any serious attempt to push higher in response. But overall, this market's looking good. It's testing the strength of the breakout from above. It's exactly what you'd like to see. About 50% of breakouts above important levels like this is an important level, the highs of the range. About 50% of the time the market will push above and then come back and test it. If the markets are really strong, they'll just continue higher, and then when they do test, it'll be up here, sort of well above the actual highs of the range. But 50% of the time, the market will come all the way back and spend some time in consolidation mode, absorbing supply prior to an attempt to continue higher. And that's exactly what this market's doing at this point in time. It could still fail here, but it's looking less likely it will do so. It looks much more likely it'll attempt to push higher once it's consolidated and absorbed the supply being drawn out from this attempt to break out. Just back to the US dollar quickly. It's pretty clear where we are. The market has pulled back to this level, which is just below the lows of the longer term range. And there was an attempt to recover, which it appears has failed. Prices moved back down. It's flirting with these lows down here. This week there was an attempt to recover, and the close well off the week's high suggests that supply has been drawn out and demand is also low, and the market has moved back down, and it's looking vulnerable. It looked vulnerable last week. It continues to do so. It has not broken down at this point in time, but it's looking vulnerable. So we'll see what happens next week. Okay, thanks for your time. Back again next week. See ya.